So, how does a company not just survive, but actually thrive when its entire industry is hitting the brakes? Well, logistics giant XPO just dropped its latest quarterly results, and the story isn't about weathering the storm. It's about building a faster ship. Today, we're going to break down exactly how they're pulling it off.
All right, so here's the game plan. We'll kick things off with the big numbers that blew past Wall Street's expectations. Then, we'll dig into how they're managing to grow while the market itself is shrinking. After that, we'll uncover their two secret weapons, a really smart pricing strategy, and a powerful AI engine. And to wrap it all up, we'll look at what this all means for the road ahead.
First up, let's talk about the headline news that's getting all the attention. Expo didn't just meet expectations for the quarter, they absolutely smashed them. And this is the number that really turned heads. XPO delivered earnings per share that were 12 cents higher than what all the analysts had predicted. In a world where even a 1 or 2 cent beat is considered a pretty good win, this is a huge outperformance. And it wasn't just on one thing either. When you look at the whole picture, you can see analysts expected revenue around $1.95 billion, but XPO brought in over $2 billion. They were looking for earnings per share of 76 cents, and XPO delivered 88. It was just a clear, solid beat on both the top and bottom lines.
The company's CEO, Mario Herrick, summed it up perfectly. He said this wasn't some kind of fluke, but really the result of a full year of consistent, strong execution. This quarter was basically the capstone on a really successful year for them.
Okay, so they posted great numbers. We get it. But the real question is, how did they pull this off when the whole freight market has been in a slump? This is where the story gets really, really interesting. This slide really gets to the heart of it. It's a paradox, right? On one side, you have the industry problem. Overall shipping volume was down 4.5%. Simply put, less stuff is being moved around. But then you look at XPO, and their adjusted operating income was up 14%. The key takeaway here is that even in a shrinking market, XPO figured out a way to get way more profitable. And this isn't just a one-quarter wonder. Since 2022, they've expanded their margin in the less than truckload, or LTL, part of their business by a massive 590 basis points. And if you're not familiar, that's 5.9 percentage points. They've been systematically getting more profitable while their competitors have been struggling. So how are they doing it? Well, it all comes down to strategy. Okay, so the first piece of the puzzle here is a relentless focus on pricing and their customer mix. See, it's not just about moving freight. It's about moving the right freight for the right customers at the right price. This strategy really has three key parts. First, their yield, which is just what they make per shipment, grew by about 6% for the year. And this isn't new. Get this, for 12 straight quarters, the revenue from each shipment has gone up. That kind of consistency is driven by the third element, a very deliberate strategy to attract more profitable kinds of business. And you can see that strategy in action right here in this chart. Higher margin business, like local customers and premium services, now makes up over a third of their revenue. By actively going after and growing these more profitable segments, XPO is just boosting its overall bottom line. All right, so that's the pricing strategy. But the other half of the story is their tech, specifically an AI-powered efficiency engine they built themselves. So while the pricing strategy is bringing more money in the door, this tech makes sure less money goes out the door on costs. So, where is this tech making a real difference? Well, a big one is something called purchased transportation. That's basically when a company has to pay another carrier to move a load for them, and it's expensive. Thanks to their AI, Expo is using its own trucks and its own network way more efficiently, and they've driven this cost down to a record low of just 5.1% of total miles. And here's how they're rolling it out. They're not just throwing AI at a wall to see what sticks. They have a plan. They ran a successful pilot program for their new route optimization tools, and now they're expanding it to nearly half of all their service centers. The goal is super simple. Use AI to find the absolute smartest routes and slash costs. And to really get why this matters, you have to look at the scale we're talking about here. The AI isn't just optimizing some small expense. It's being aimed at a cost category worth nearly $900 million. So even tiny percentage improvements here translate into massive, massive savings. Okay, so we've got a strong quarter in a tough market, all powered by a smart strategy and some serious tech. So for our final section, let's talk about the big question. What does this all mean for XPO's future? Looking ahead, the company laid out a pretty clear roadmap.
They are not slowing down one bit. They're planning to invest up to $600 million in things like new trucks and service centers. This guidance really shows they're focused on building on their current momentum throughout the whole coming year.
But here's the real payoff, especially for investors. All of this efficiency and profitability is expected to lead to what they call a meaningful acceleration in free cash flow. What's that? It's basically the cash left over after all the bills and investments are paid. It's the good stuff. It's money the company can use to buy back its own stock or pay down debt, and both of those things create a ton of value for shareholders. So this all brings us to our final thought. XPO has built this incredible engine of profitability that works even when the market is down. So with their AI getting smarter every day and the real possibility of the freight market finally recovering, the question is no longer just about outperforming. It's about whether XPO is positioned to truly dominate the road ahead.